Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 18th of September. That near-term dollar rally that we saw kicking in off the back of the Federal Reserve monetary policy meeting on Wednesday has just dissipated fairly quickly actually. Didn't last that long. Market was sort of reacting a little bit higher and then saw that the rally was not especially long term in nature, and subsequently data came in a little bit worse than expected yesterday and the dollar fell away into the close. And we've sort of seen that sort of move back towards recent lows of the last week or so, but just consolidating essentially, a little bit of a shade negative on that. And if you look at Treasury yields, they're basically flat. 10-year, 2-year, all but flat, nothing really doing there. So at the moment markets are sort of looking a little bit wishy-washy, a bit consolidation, shade of dollar weakness through the euro, sterling and yen, but little real direction. Gold and silver ticking a little bit higher on the back of that dollar weakness or marginal dollar weakness. It's playing into a gold rebound of $11 and silver slightly higher, but again nothing really doing in terms of direction on those markets. And I'll talk through the technical implications of this moves or these moves in a little bit. Silver's my chart of the day. Now equity markets again all but sort of flat around Europe. We had Wall Street falling into the close, or falling or closing lower, although off the lows of the session yesterday. And then futures in Wall Street are basically just a shade higher, and again in line pretty much with what we're seeing through these European moves. Now, in terms of data points today, we're predominantly, we've got the current account at 130, which is expected to widen in Q2 for the US. To 158 billion from 104 in Q1. But the big focus is going to be on this Michigan sentiment data, expected to tick higher to 75 from 74. This is the flash or the prelim reading. Watch out for how that how any improvement is sort of configured. You've got expectations which are slightly lower, although the current conditions are slightly higher. So how the makeup moves that improvement in the sentiment is going to be interesting, but sentiment still needs to pick up quite considerably, I think, to really suggest that a US recovery is on. You can see the confidence data is still fairly low, not really managed to recover at all on consumer confidence or Michigan sentiment, has it? So that needs to start to pick up significantly. That sort of plays in at the moment to how the dollar underperformance seems to be a ongoing situation. Right, so my chart of the day is silver. Now, silver has been consolidating. It continues to consolidate, but the interesting move, I think, was the fact that the bulls once more supported the intraday decline. 26.29 was yesterday's low. Again, sort of formed around that 26 big figure line and then rebounded to neutralise the outlook again. And you can see that momentum indicators are all but flat across the daily indicators. Hourly, you sort of need to get this one back through the resistance band 2740 to 2770. This resistance band of the past 2 to 2.5 weeks or so, 3 weeks, needs to be broken. Otherwise, this is just going to remain a consolidation play. And you've got these hourly indicators which are all flat. But we still think that with the dollar weakness that we're expecting to come through, the silver and gold will continue to push higher, but just needs that break, because at the moment consolidation is the name of the game. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.